Bitcoin crossed $80,000 on Sunday, its highest level since early February, as a wave of bullish catalysts converged in a single trading session. The rally was sparked by news that the Clarity Act, the long-debated stablecoin regulation bill, has secured enough bipartisan support to move to a full Senate floor vote as early as next week. Crypto-linked stocks surged in response, with Circle jumping 11% and Coinbase rising 8% in after-hours trading on Friday. Spot Bitcoin ETF inflows also accelerated sharply, recording over $900 million in net new capital during the past week alone. Market analysts pointed to the rare combination of regulatory clarity and surging institutional demand as the primary drivers behind this decisive breakout above a key psychological level. The move also coincided with reports that the White House is considering a new Federal Reserve Chair nomination, adding fuel to the already strong risk-on sentiment sweeping across global financial markets. The Depository Trust and Clearing Corporation, the backbone of Wall Street's settlement infrastructure handling over $114 trillion in securities every single year, has unveiled plans to launch a blockchain-based tokenization platform for traditional financial assets. The system will begin with a pilot phase in July, allowing select broker-dealers to trade tokenized representations of Russell 1000 stocks and U.S. Treasury bonds on a permissioned blockchain network. A full public launch is targeted for October, with several major Wall Street firms, including 2 of the 5 largest U.S. banks, already signed on as early participants in the initiative. The move represents the single largest traditional finance institution to date committing to on-chain settlement for equities and fixed-income products. Industry observers noted this could dramatically reduce settlement times from the current one-day cycle to near-instant finality, potentially saving the industry billions in capital costs. The platform will operate under existing regulatory frameworks, meaning tokenized securities will carry the same legal protections as their traditional counterparts. Ethereum developers have confirmed the full scope of the upcoming Glamsterdam network upgrade, which will triple the chain's execution layer capacity in a single hard fork scheduled for later this year. The upgrade bundles 3 major technical changes: enshrined proposer-builder separation known as EPS, block-level access lists, and a comprehensive gas repricing proposal under EIP 8037. Together, these changes will raise Ethereum's effective gas limit floor to 200 million, up from the current 66 million, enabling significantly more transactions to be processed in every single block. The massive throughput increase is expected to keep base fees near zero for the foreseeable future, potentially making Layer 1 transactions competitive with Layer 2 rollups on cost for the first time. Developers emphasize that the upgrade carefully maintains Ethereum's core security guarantees and decentralization properties, while removing long-standing execution bottlenecks that have constrained the network. A testnet deployment is planned for late June, with a mainnet activation target in the 3rd quarter.